Alliance Trust and Witan are merging to discuss the benefits for both sets of shareholders and why this merger is coming about. I'm joined here in the studio by Dean Buckley, Chairman of Alliance Trust. We're also joined down the line by Andrew Ross, Chairman of Witan. Andrew, let's start with you. Your CIO, Andrew Bell, is retiring at the moment. Can you describe the process you've been through to find a replacement for him?
Sure. Well, the board's decision was not just to look at a like-for-like replacement, but really to take this as an opportunity and step back and see what propositions were available to give the very best solution to Witan shareholders over the forthcoming years. So we worked very closely with our advisors, JP Morgan Cazenove, to construct a really robust process. This saw us announcing our intention to go out to tender in March. We had about 50 applications in response to that. We cut that to a second round of 10, gave that a lot of consideration, and came up with a final round of 5 institutions, all of whom presented directly face-to-face to the board.
Well, given you had a lot of eligible suitors, what made you pick Alliance Trust to run the portfolio?
So we did indeed have a number of outstanding presentations from some serious institutions, to be frank, any one of which would have been very worthy successors to Andrew Bell. But in the end, the board unanimously picked Alliance, and there were 2 reasons for that. One is for us and our shareholders, it's continuity, because it continues the multi-manager approach that we adopted some 20 years ago. And we looked at a number of very persuasive and very impressive single manager solutions, but that always has the risk of joining a manager right at the top of their investment cycle, and multi-manager avoids that risk for our shareholders. The second point is that we were very impressed with Craig and the team at WTW. Their particular approach to doing multi-manager, I think, constructs a portfolio in a way that a retail investor simply can't do on their own. And it's produced good performance numbers since Alliance appointed them in 2017. The NAV of Alliance is up by just over 100%, as against the world index at 95%.
Well, why did you bid for Witan's assets, and what are the benefits of that going to be for the Alliance Trust shareholders?
Well, firstly, I'd like to thank the Alliance Trust shareholders for their continuing support, and I hope very much that they like the proposals that we've announced today. Witan was an early adopter of the multi-manager strategy that we follow. We've been long-term admirers of what they've done, and we viewed them as quite tough competitors for our trust. Having said that, there's quite a lot of similarities between what we do. So a combination of the 2 companies made a lot of sense and represents continuity for both sets of shareholders. Witan has a large pool of assets, and when combined with ours, the net asset value of the combined company will be in excess of £5 billion. And that enables us to drive real economies of scale. And we're targeting an OCR for the combined company in the high 50s, which I think represents really good value for a global equity multi-manager proposition. Also, the new Alliance Witan will have a much higher profile, and we think it will be included in the FTSE 100 index, and there'll be much more liquidity in the shares. Now, I meet a lot of retail investors, and they tell me that we don't need more liquidity in the shares, but I want Alliance Witan to appeal to as broad a church of investors as we possibly can. And I think our proposition is quite compelling for wealth managers and small and medium-sized pension funds. Now, they need liquidity to enable them to invest. And whilst we already have quite a large number of those institutions on our share register, I think we can have more. And I think the enhanced liquidity will help make that happen. Now, in order to do these deals, boards need to be pragmatic around certain things. And both Witan and Alliance have dividend hero status. We've increased our dividends consecutively, both of us, for over 50 years. Now, the Witan board felt very strongly that they didn't want to see their shareholders have any diminution in their dividend as a result of this deal. And the Alliance board were completely empathetic to that point of view. So we've decided to increase our dividend slightly so that we can ensure Witan shareholders see a progressive dividend through the combination. And I'm sure that many of our retail shareholders will be happy with that news as well. Now, having said we need to be pragmatic to get the deal done, we also had some red lines that we wouldn't cross. And one of those was that we didn't want our shareholders to see any NAV dilution as a result of this proposal. And I'm pleased to say that we've achieved that. And indeed, when we model the latest assumptions, actually we think the deal will be slightly accretive for Alliance Trust shareholders.
And Andrew, from your perspective, what are the benefits of combining the two trusts for the Witan shareholder base?
Well, the first thing I'd point to is the larger size of the combined entity, which means better market liquidity and lower fees. So Alliance Witan, which is what the combination is going to be called, will have net asset of somewhere around 5 billion. We think liquidity, giving maximum liquidity to shareholders, is what all great investment trusts should be doing. And clearly for Witan shareholders, that's going to have more market liquidity. Secondly, on fees, WTW have come up with a new fee structure, which is targeting costs of just under 60 basis points. And that compares to Witan's current ongoing charge ratio of 76 basis points. And then the other factor about the larger combined entity is that Alliance Witan should be a constituent of the FTSE 100 index, which is good for raising shareholder awareness of the company. The next point is dividend. And the way that we're structuring the dividend of the combined entity means that we will be able to continue the record of dividend growth that Witan shareholders have had and maintain our status as a dividend hero, which has seen us raise our dividend in consecutive years for about the last 50 years. And then I think that there's one other point, that it just over the transaction itself, we should see the value of shares rise, because Alliance has tended to trade at a tighter discount to net asset value than Witan recently. And finally, if shareholders wish to sell some or all of their holding, they can tender their shares at a 2.5% discount to Witan's net asset value. So I think there's lots of things that are in this deal for Witan shareholders. And Dean and I both agree that both companies have very similar cultures, and both have always aimed to be a one-stop shop for global equities for retail clients.
And Dean, will this deal change the way that Willis Towers Watson runs a much larger pool of assets for the Alliance Trust?
Now that was another red line. There'll be no change to the Alliance Trust investment strategy as a result of this proposal. We'll continue to have a concentrated, best ideas, multi-manager portfolio run by WTW in the same way that it has been since 2017. WTW optimally have between 8 and 12 managers running our portfolio. So I wouldn't be surprised if some of Witan's managers came through to manage money for the combined entity. Indeed, 2 of the managers, GQG and Veritas, already manage money for both entities. It should also be noted that there's a small number of illiquid holdings that are likely to come across as part of the proposal. We've held illiquids before. We're comfortable doing so. We've got no time frame in which to sell those, and WTW will manage those in the best interests of the shareholders.
And what's the process for concluding this proposed deal?
Well, there's a lot of hard work underway at the moment, and we've set up work streams to deal with all of the most significant issues around the proposal. But in terms of what might be visible to shareholders, so we'll send out shareholder circulars in the second half of August, and we'll have general meetings in the second half of September, which will allow shareholders to vote on the proposals. And with a following wind, we hope to have the new Alliance Witan shares trading on the London Stock Exchange last week of September, early October.
And who's going to be chairing the board?
Well, we asked the senior independent directors of both companies to set up a process to appoint the new chair. That work has now concluded, and a few days ago, they asked me if I'd like to be chair of Alliance Witan. I was very happy to accept, and I'm greatly honoured to be leading the company through the next stage of its development.
Well, a final question to each of you, if I may. What do you think this combination is going to mean for the broader investment trust industry? Andrew, can I come to you on that first?
Well, firstly, we're combining two already reasonably substantial investment trusts into one clear leader in multi-manager investment for retail investors. And as I said earlier on, the portfolio is put together in a way that other investors really can't replicate. The second point is this will be the largest combination of investment trusts the London market has seen, and maybe that will lead other people to conclude that a bit of consolidation is a good thing for the sector, because it'll bring larger investment trusts with greater liquidity, and I think that's good news for investors. And finally, from Witan's point of view, this is our 100th year as a quoted company, and I think this combination is a great way to mark that and to give us the ability to bring continued outperformance to our shareholders over the coming decades.
Mm-hmm. And Dean, what are your thoughts on that?
Well, the investment trust industry has served investors well with interesting and innovative investment solutions for well over 100 years. On the whole, I think performance has been excellent, and through strong independent boards, I think the cost structure of the industry has been very competitive. Right now, though, discounts are at wide and uncomfortable levels, and I think that represents some imbalance between supply and demand in the industry. I think part of that is cyclical and will play out through time, but I think part of it is structural, and I think that there is some structural oversupply of investment trusts. Some investment trusts are around today that were relevant to investors in the past. Perhaps they're not so relevant today. Perhaps they don't have the scale to compete and offer liquidity, and maybe they don't have the performance that investors are interested in. So I think consolidation across the industry is a good thing. Witan and Alliance didn't need to be part of that consolidation. We're both large, successful investment trusts. But the boards have chosen to come together because we think together we can continue to deliver great investment performance for shareholders for many decades to come.
We have to leave it there. Dean Buckley, Andrew Ross, thank you.
Thank you.
Thank you.